right, Sharon, thank you. Meantime, the stock market's fading, or has been in the final hour here, coming off the lows right now, but technology's been adding to the pressure. Apple giving up earlier gains, that bailout over in Spain. It had a short shelf life for investors. It lasted, at least here in the U.S., about half an hour. But have no fear, because one of our next guests is still confident about his bullish year-end target for the S&P 500.
Yeah, let's get that call from the man himself. He's Brian Belsky from BMO Capital Markets. Also with us is Tom Belesis from John Thomas Financial. Brian, you say 1425 by the end of the year for the S&P 500. That's more than 100 points from where we are now. This Greek elections be damned. Do you think we get there? Why?
Well, the fundamental construct of U.S. stocks still looks pretty good. We're in one of these structural breaks right now where fundamentals look a lot better than prices. And clearly, when the market was running up in the beginning of the year, investors didn't have to deal with any bad news. All of a sudden, some bad news or some scary things start to happen and they start to sell. For all intents and purposes, the strategy of investors the last 3 years has been the same, right? Sell into the rallies and buy into the dips until we get some sort of clarification, number one, from Europe. And clearly, with the election season coming on, it's going to be a noisy summer. So we think we could get a very strong and surprising relief rally just before the election as the market tries to anticipate a closure in this whole season.
Tom, you think the election is really crucial too, right?
I do, and I think that over the next several months, you're going to...
We're talking the U.S. election,
by the way. The U.S. election, correct.
Right,
Forget about the Greek election.
There's that Greek election coming up pretty soon, yeah.
I think ultimately, as soon as we have some confirmation that Obama is going to lose the White House, I think the markets are going to rally substantially for the next several years. And I'll tell you why. I mean, a lot of people out there are very nervous and are on the sidelines with a lot of capital. Why are they not spending? Because they have no clue what tax is going to be, what health costs is going to be. So they're sitting on the sidelines waiting for confirmation of this.
So let me play devil's advocate then. You think all that will be clarified under Mitt Romney if he were to be elected?
I do. I do believe that.
He's still got the same Congress to deal with.
He does, but I think he has a business background, and America is a corporation. Let's call it how it is. And if you have a guy of Mitt Romney's stature running this country, he'll do a lot better than Mr. Obama.
But I'll repeat what I said. He's still got the same Congress he's got to deal with.
He does. It's a very good point you bring up.
Wouldn't we also have clarity if President Obama won? Maybe you wouldn't like the outcome, but we'd have clarity about where it was going, wouldn't we?
Well, as was put, the business of America is business. We're running a business. We have to create revenues and cut costs. And so ultimately, Mr. Obama is going to have to follow under that suit. He's going to have to become more conservative with his fiscal policy. It's going to be forced upon him by the rating agencies with the potential threat of another downgrade. Remember, borrowing costs didn't really go up this first time, but borrowing costs historically go up the second time.
The second time. You think you've seen a pattern? Because I was going to say, the first time they downgraded the U.S. debt, Americans, investors all over the world ate up U.S. debt like crazy. Our interest rates dropped dramatically.
The other thing, too, and Bill talked about the Congress, that we've seen historically that lame duck Congresses actually get a lot done because they don't have to worry about their jobs anymore. They're just getting it done.
What do you like in this market? What's going to lead us higher?
I think you've got to be very defensive here. I mean, we have a lot of seesaw action. Why? Because of what's happening in Europe. You have a lot of people think that Italy's going to become the next Spain and Spain's going to become the next Greece. You had a great enthusiasm last night, met with a sell-off here today, which shows that people are very concerned with what's going on in Europe. So until the EU or Germany steps up to the plate and says, we have a resolution, we have a plan, I think you're going to see a lot of this seesaw action.
So defensive in the stock market means what?
I think utilities are a great place to be. I think some REITs. I mean, people are looking for yield plays. There's no yields out there. People are starving for yields. They want yields.
Brian?
I think yield growth is probably more important than high yield in general because you want to find those companies with good cash flow enough to continue to increase the dividend. So there's several technology, industrial, and even consumer staples names that are growing the dividend instead of buying telecom utilities at these levels.
So
Apple or Facebook, either one of you?
We like Facebook. Yeah, we do like Facebook.
Why?
We're probably one of the only ones. I mean, we have a nice stake of our investors' capital in Facebook. We think longer term, Facebook's
Where did you get in? Are you sitting on a negative position right now?
Yeah, I would say a little bit. But we're still confident,
Most people are, I would think. And Brian, I'll get some more from you coming up on the countdown in a few minutes here as well. Tom and Brian, good to see you both. Thanks for joining us.
Thank you, guys.
Okay, we got about 15 minutes before the closing bell. The Dow Jones Industrial Average right now is lower by 98, and the NASDAQ is lower by 37.
Billionaire investor, his net worth has gone